You're listening to the REITE Club podcast, where the focus is all about helping you grow your real estate investment portfolio and live the life you want to live. Come grow with us and join our community at thereiteclub.com. And now your hosts, Sarah Larby and Alfonso Salemi.
I've done all kinds of stuff, buy, hold, flip, fix, all kinds of stuff. And, the most sustainable long-term strategy, the one boys use, especially in the private equity world, it's, essentially the BRRRR is the buy, except they don't do it with houses. They do it with building strip malls. I mean, there's so many tax advantages to doing it that way. From a risk mitigation standpoint, there's less risk. I've been involved in development as well, where literally, you dig a hole and up a building, and I can tell you there's more margin there, but there's also actually more risk. And then on the other side, you have here's the coupon clipper. You can just buy this thing and fall asleep on it. But that middle ground where you have the ability to buy an apartment building or buy a house that needs some paint, needs some, in-between work, in my opinion, that is the most, it's where I want to continue to play. I mean, I'm a cash flow guy. I love cash flow. I love cash flow real estate. And, 15 plus years later, I think back to myself, if I just stuck to that and I didn't do anything else, I'd have more brown hair on my head and probably less, financial lessons along the way with trying to do things like developments or new construction.
Yeah, absolutely.
Excellent.
Just out of curiosity, and I don't know if you're comfortable sharing, but like how many millions of dollars have you raised over, the time that you started doing this?
Sure. Yeah, no. So I've sourced over, I'd say at least at this point, $250 million in funding for businesses. Not all of that was real estate. I was involved in financial service, finance-based businesses where I secured letters of credit, term sheets for larger facilities. Those are $25 million, $50 million. But direct real estate equity related transaction, it would have to be at least 100 plus million. So, through that, and you got to remember, I was fortunate because I went into private equity early, as opposed to just trying to raise $100,000 to buy a house. Immediately, I was looking at, okay, so we're buying a 200 unit seniors home or, seniors living facility. We need X amount of millions of dollars. So you're forced to think differently right out of the gate, because whatever you think you want to do for $100,000 is not the same thing you need to do for 10 million. And it changes it. But what's interesting, Sarah, is that as I look back at it, whether you're asking for that $5,000 check for somebody, which I've gone and gotten as well, you drive across town before they change their mind because you're just so thrilled that they're going to invest with you, right? So, whether it's that $5,000 check or $500,000 or $1 million commitment from someone sophisticated, ultimately it's the same thing, except for that bigger check, you have to be able to go deeper on all of the different topics.
Yeah, and it's like you said, it's the same idea, and it's getting comfortable. Well, I guess kind of asking or presenting for that money. That's really interesting.
Yeah, well, what you have to be mindful of is you're not. I have never taken the approach that I'm in a subservient position where I need you to do something with me because I need you. And that's not meant to be arrogant. It's just meant to be that you're there to solve a problem for people that need a problem solved. And in the case of raising money for your projects, if you have good projects, a track record, and you're confident in your capacity, what you then need to do is have the attitude of who has money that needs to find a place to put it. And as soon as you don't take it as, you're looking for charity, but you're actually looking to solve someone else's problem, because there's billions of dollars. I know people that have, a friend of mine, they just had an exit on a company here. Literally, I heard about it today. And, she's going to have a multi-million-dollar issue. There you go. So, whether we do something together or not is irrelevant, but she's going to have an issue that she's going to have to figure out what to do with that money. So it's a different mindset. And whether it's for $50,000 or $50 million, if somebody has money that they need to deploy, you need to think of a way to be can you help them solve that problem? That's really what that is.
Yeah, absolutely. That is really well said. And like for me, even with my RSPs as an example, like I don't want that money just sitting there. I'd rather loan it out like as mortgages and different things like that. So I want it to be working for me. Are you able to share perhaps one of the like latest projects that you've been working on, and then just in terms of like acquiring funds and how you position that, just so we get a good picture of what it is that you put all the pieces together with?
Sure. Yeah, happy to do it. I have a system that I call the 8 pillars to a successful raise, and there's different components. And again, whether you're buying a duplex or in the case of the last building we bought was a 178 unit apartment building. The fundamentals, the pillars as I call them, are the same. And any presentation on a transaction for me is the same formula. And so I'll give you an example. The last deal we did, it was in Memphis, Tennessee, and I've really been on a sort of a love affair with Tennessee and Memphis of late because, the market makes sense, the price per door makes sense. Like for example, we bought 178 units and we paid about $20 a door, which is, you can't buy a parking spot in Toronto for less than 50,000 or 60,000 nowadays, right? So, that was intriguing to me. The economy is on fire. You have FedEx's global headquarters is in Memphis. They have airplanes coming in. Pre-COVID, they were slammed. Post-COVID, now that everybody's buying everything online, the logistics hubs they're insane. Amazon has a few million square feet there. Nike, they have 2 million square feet there. Nike, actually, a third of their sales is now direct to consumer because of COVID. Whereas before they used to have, retail, the Foot Lockers and all that. So they're doing direct to consumer. And, so when you combine a strong economy, landlord friendly, low state taxes, and, low price per door, and then you combine that with the fact that if you were to build anything now, I can't, I think I paid 20, whatever it was per square foot. I think it was $25 or $30 a square foot. You can't build anything, anything legally with legal labor for under $125, $150 plus the land. So there was a lot of the fundamental markers that made sense for me. So, essentially what we did is we packaged all of what I just said in a cohesive, tangible presentation. And then what we did is we had the investment. So we had our investment thesis before we even had our buildings. So we bought 260 doors in the last, I'd say 8-9 months. And before we had the doors, we already had our investment thesis. So that's one of the things is that if you're raising money, first of all, if, you've probably met people that are pitching you like 13 different things all at once. You're just like, oh man, like, what are you doing? So you have to have a focus. You have to have a thesis around why you do what you do. Because as soon as you have that, even if you don't have a deal, you can talk about the context of what you're doing and why you're doing it. And you can build interest with people even before you have a deal.
Thanks for listening to the REITE Club podcast and joining our community of real estate investors online at thereiteclub.com, where the focus is about helping you grow. We look forward to seeing you again next week. Thanks from your hosts, Sarah Larby and Alfonso Salemi.